Listen carefully. Right now, US dollar to Japanese yen is at 162.43 and the market is pricing in a perpetual dovish Bank of Japan. But here's what nobody is telling you. The intervention ghost is not dead, it's just waiting. There is one danger zone and one hidden opportunity right now. I'll show you both. In the next few minutes I'm giving you 2 scalp plays and 1 swing trade you can execute today. Do not skip, because the level we are about to discuss will separate the winning trades from the panic stops. Stay to the end. Tomorrow's wildcard depends on a single close I'll reveal at the close. The session bias is clear. We are in a structural bull trend across monthly, weekly, daily and even the 5-hour chart. All are reading strong buy. But the 1 hour is a sell. That's a volatility funnel. This is a trending market fading intraday. And the trap is that weak hands are shorting the pullback into a freight train. So the immediate bias is to buy dips above the invalidation level. Write this number down. 162.12. If we see an hourly close below 162.12, the whole short-term structure resets and the 1 hour sell could accelerate into a deeper stop hunt towards 161.59. Above 162.12, the bulls own it and every tick lower is a reload. Right now the herd is leaning short on the 1 hour momentum, and that's exactly where the liquidity is sitting. A squeeze above 162.93 would vaporize those stops. Feel that? That's profit before the market even moves. Let's zoom out. On the weekly chart, price is cruising above every major moving average. The MA20 on the weekly is down at 161.21, the MA60 at 160.11, and the MA200 at 156.82. We are miles above all of them. This is an unstoppable bullish trend. The MACD on the weekly is expanding. No divergence, just pure momentum. On the daily, the same story. Price above all Mars. RSI is at 73.96. Overbought but not bearish in a trend this strong. It can ride overbought for weeks. The ADX is 58.78, a screaming trend reading. So any sell-off is corrective until proven otherwise. Now drop to the 4 hour. Still strong buy, but the MACD histogram is slightly flattening, and the CCI is at 141, very extended. That hints at an intraday pullback. The 1 hour is the rebel. A clear sell signal, price threatening to roll over, stochastics already down at 69, Williams are at -12, but not yet oversold. This is the divergence that catches people. Here's what most traders miss. The 1 hour sell signal is not a reversal, it's a liquidity raid in progress. The pivot point at 162.40 is the magnet. As long as we hold above 162.12, the first key support, the pullback is a gift. The next support after that is 161.59 and then 161.31. On the upside, resistance sits at 162.93, then 163.21. I see the 173.21 is a data artifact, so the real second resistance is 163.21, and then 163.74. That 163.74 level is critical. A daily close above it opens the door to a melt-up towards the psychological 165.00. Now look at cross-asset linkage. The 10-year Treasury yield is holding firm above 4.4%. The US-Japan yield differential is wider than the Pacific, and that's the rocket fuel for this pair. The Nikkei is up, risk-on flows are punishing the yen, and the carry trade is alive and breathing fire. That's the macro architecture. At the 3 o'clock mark, I want you to pay attention. The hidden divergence is on the 1 hour MACD. Price made a higher high at 162.60, but the MACD histogram made a lower high. That's a classic bearish divergence, but in a strong bull trend it's a trap. It often resolves with a shallow dip and then a violent rally. So if you're just looking at the 1 hour sell signal, you're going to get run over. I'll show you exactly how to exploit it in the setups. The core news today, the BOJ's slow, dovish revamp is casting serious doubt over long-term rate hike plans. Policymakers are signaling that any normalization is glacial at best. The yen is getting battered because the interest rate differential against the dollar is colossal, and that's not changing anytime soon. Intervention risks are growing. The Ministry of Finance has drawn its line in the sand multiple times, but verbal intervention without action is just fuel for the carry trade. Today, the market is testing that resolve. Here's the narrative web. The dollar is king because the Fed is holding rates higher for longer. US inflation data remains sticky, and the terminal rate expectation hasn't budged. That widens the spread versus the JGB yields that are pinned near zero. Bitcoin and Nasdaq futures are rallying, reflecting a risk-on environment that further drains the yen. Oil is calm, so no geopolitical shock to force safe haven yen buying. The entire constellation is aligned for further yen weakness. My 1 to 2 week directional lean is bullish, targeting 163.74, with a stretch target of 165.00. The event that invalidates this is a daily close below 161.31. That would signal a structural shift and a possible intervention-triggered washout. Second interaction trigger. Do you think US dollar to Japanese yen breaks 163.74 this week? Comment yes or no. I'm tracking consensus. Write it below. Before we begin, most people skip this section. That's exactly where the money is made. Keep watching, because these levels are machine readable and the liquidity is thick. Strategy 1, the opening scalping, high probability. We focus on the pivot bounce. Price is hovering near the 162.40 pivot. The 5-minute chart is building a base. The trigger condition. Price taps 162.35 to 162.30 area. This is a confluence of the pivot and the MA5, and prints a bullish engulfing candle on the 5-minute. You enter long immediately at 162.38. Your stop loss goes at 162.12, just below the key support we identified. That's only 2.6 pips of risk, tight and clean. Take profit 1 is at 162.68, that's a quick 30 pips, right below the intraday resistance before 162.93. That's a risk reward better than 1 minute and 1.5 seconds. If momentum accelerates, you can trail a second position towards 162.90. What instantly voids the scalp? If the 5-minute candle closes back below 162.12 after your entry, you're out. This setup exploits the failure of the 1-hour sell signal to push deeper. The opening SCALP entry, 162.38, 5M bullish engulfing after 162.35 tap, stop loss, 162.12 take profit 1, 162.68 take profit 2, 162.90, trail, risk, reward, 1:2.3 R invalidation, void if 5M candle closes below 162.12. Strategy 2, the liquidity grab, scalping, counter noise. Right now the 1-hour sell is creating a false sense of breakdown. I see a stop-hunt zone just below the overnight low, around 162.05. That's where sellers are piling in with tight stops just below 162.00. The play, wait for a quick poke below 162.00, a fake breakout that hunts those stops, then an immediate snapback above 162.10. You need a 1-minute closeback above 162.10 for confirmation. Entry is at 162.12 on the reclaim. Stop loss at 161.98, just below the wick. Target is a single fast TP at 162.45, right back at the pivot. This is a classic liquidity grab, and it's a sniper's play. Requires fast execution. If price fails to reclaim 162.10 within 2 minutes, the trap fails, and you stand aside the liquidity GRAB entry, 162.12, 1M reclaim after 162.00 stop hunt, stop loss, 161.98 take profit 1, 162.45 risk, reward, 1:2.3 R invalidation. Void if no reclaim above 162.10 within 2 minutes. Are you scalping or swinging this week? Comment scalp or swing. I want to see where this community sits. Type it now. Strategy 3. The session swing. Swing. Trend alignment. This is the trade. That aligns with the higher timeframe brute force. The daily and 4H are strong buys. We wait for a deeper pullback that tags a critical moving average and support cluster. The trigger. A 4-hour close above the 60 MA? No, price is far above it, so we need a different mechanism. I'm looking for a 4-hour bullish MACD cross after a retracement to the 161.80 to 161.59 support zone. That's the S2 level and the area near the 4H MA20. The entry condition. Price pulls back to 161.82, then prints a 4-hour close with a bullish MACD histogram tick up. Entry at 161.85. Stop loss goes at 161.29, just below the daily S3 and the 161.31 support. That leaves room below structure. That's about 56 pips of risk. Take profit 1 is at 162.93. The immediate resistance, offering a risk-reward of 1 minute and 1.9 seconds. Take profit 2 is at 163.74, a stretch target, which would deliver 1:3.2 R. Once price reaches halfway to TP1, around 162.40, move your stop to break even. The invalidation for the entire bullish swing, a daily close below 161.31. That would violate the daily trend structure and open the intervention trapdoor. The session swing entry, 161.85, for H bullish MACD cross after pullback, stop loss, 161.29 take profit 1, 162.93 take profit 2, 163.74 risk, reward, 1:3.2 R, to TP2, invalidation. Void if daily close below 161.31 A. Fast reminder. Never risk more than 1 to 2% per trade. On these scalps, your risk should be half that, 0.5% because the stop is tight but the frequency is high. No positions through surprise BOJ statements. Or high-impact US data. Stops are non-negotiable. This is how you survive to trade the next big yen move. So. The single most critical level for the next session is 162.12. Lose that, and the floor cracks. Hold it, and we are reloading for 163.74. Tomorrow's wildcard, the US ISM services data and any whiff of verbal intervention from Tokyo. If Japan's top currency diplomat opens his mouth, we could see a 60 pip spike in seconds. If this level breaks, the whole monthly trend doesn't flip, but the intervention ghost becomes real, and I'll have the updated blueprint 24 hours from now. If you want the full breakdown on Bitcoin and the S&P divergence, that video is live now. Tap the end screen. Then hit the bell so tomorrow's alert lands before the open. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that matter. The trap is set at 162.40. The yield fire is roaring. The BOJ is printing dovish minutes while the intervention ghost circles. This is exactly the moment where discipline turns volatility into profit. See you in the next one.